the last two times that we've seen this signal, Bitcoin dropped a subsequent 57%.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Well. Welcome back to Krown's Crypto Cave. Waking up for a little bit of an earlier morning after a massively long, epically long Twitch stream last night, which I had a shit ton of fun in. I want to wish everyone well who joined on in because, and everyone else as well, because why the fuck not? But more importantly, it was a ton of fun. So I want to say massive thank you for coming on out. We'll be doing it again today, perhaps even longer. So maybe a new record is on the books. Anyways, we got a lot to talk about on good old price action, as we actually are seeing a little bit of continuation over the weekend. More importantly, we have some things to point out here on our Krown trading app, which can be found at app.krowntrading.net. It's free. Go take an account and take advantage of it. Anyways, the open interest has actually been steadily coming up as we've been watching it for the last few weeks, or well, mostly the last week and a half has really been related to each other, as we've seen the open interest come down as Bitcoin moves up in price action. Now we're seeing the open interest go up as Bitcoin comes down in price action. That's going to be tied into the analysis very, very soon. But before we get into that, I also do want to check out the other underlying market dynamics, of which we do see Bitcoin dominance more or less steady here. Not really seeing any major change there. So alts most likely ranged on the lows versus versus Satoshis. On top of that, total market cap more or less steady as well. And the crypto fear and greed index also pretty much the same from yesterday as well, although we did go from an 8 to a 12. So people getting a little bit more optimistic as Bitcoin drops down another $300, $400. Very interesting stuff. But with that said, let's get into the actual analysis right now and address the opening statement. Now, typically my opening statements or my titles are completely clickbait. They have very little to do with the actual content of the videos. But this one is going to be the focus right now, as we do have the 2-day dildo death cross now fully initiated. This has been a signal of death and destruction in Bitcoin land, at least the past few times that we've gotten it on a macro scale. Now, while we are here, and because it is a Sunday and we will be talking about long-term price analysis, let's start it off with some higher time frames, as which we will start off with the 2-day. So this is the green 55, that is purple 200, that is an exponential moving average death cross, and it is more or less confirmed. Technically speaking, you'd want to see one more solidified 2-day dildo in order to fully and formally say that it's confirmed. But this is probably good enough for me, and this is essentially my read on price action, and I believe that this will hold up. I mean, it's inevitably going to hold up, as these are fucking moving averages to begin with, as long as Bitcoin especially remains below 7,000, and even as long as it's below about 7,300, which is actually going to be a very important number going onwards and forwards here when we look at the monthly close. Anyways, as we look at it right now, all these major moving averages have very aggressive negative slopes, especially on the 55 and the 21, and we can see that there's been a damn good implication between these two over the history of Bitcoin. So the last two times that we've actually seen this happen on in Bitcoin, which is actually the only two times that we've even seen it in Bitcoin's 10 years of history, we're back on over here in September 2018. Bitcoin gets a death cross right here, and then slowly but surely, as we get ground down below the yellow 21 exponential moving average, and all of the bots and algos switch on their sell programs, that is what catalyzed this move all the way from about 65.50 high to a 52.25% low at around 3,100ish region. Is this last year or 2 years ago now? No, that's last year. Holy shit, man. This is fucking crazy how fast time flies. It actually is really, really scary. Anyways, if we go back down to the time before that we actually got this in the land of opportunity, we do see that Bitcoin got the death cross back on over here, quite similar after about a year-long downtrend, putting in a descending triangle on the lows to September 2014. It looks like, October 2014, and we get the death cross right on over here. Next high gets rejected, then it gets ground down below the yellow 21 exponential moving average as well, very similar, and until we put in the next major low on a massive capitulation volume spike, we move about a 64% move from top to bottom from that last high rejection to the next low. Now, before that, we don't really have any other examples because, Bitcoin hasn't been around for all that long, about a little bit over 10 years now. But more importantly, we have our third and potentially trend-forming signal of this, as 2 times doesn't necessarily make a trend, 3 times does. But we're going to look at some other auxiliary indicators that are going to round out this analysis a little bit better. Anyways, as it stands right now, Bitcoin does have the death cross more or less confirmed. Technically, you'd want to see one more one more dildo solidified, but this is probably good enough for me, as I did say. And just playing with numbers here, as I do think that that's fun to do, playing some number games, we can shave off, an average of that price that we've seen before and just check out where Bitcoin may find itself. As if we do shave off about 50%, where does this put us at? It actually puts us back down around here in our $3,000 low, or $3,300 low if you want to get exact with that numbers. Now, that number actually is quite interesting, because if we do go over here to CMEs, well, for all the Gap boys that talk about 11,500 and more recently 8,700 right here, and we will have certainly another one opening up today as well, assuming that Bitcoin doesn't have a $500 rally to the upside before CMEs open at 5 p.m. Eastern Time. By the way, we just had daylight savings here in Finland, and I fucking hate it. This is the worst. It's literally the worst day of the year, every fucking year. I absolutely despise it. Why take away an hour of sleep? I don't know, but that's just what we do as humans, I suppose. Anyways, I just lost my train of thought. What was I about to say? Yes. So as far as CMEs go, we do see that there's going to be, we're going to open up on another gap right over here. But the gap that people don't actually really like to talk about too often, or at least the people who perhaps, live with their parents and do cryptocurrency analyses and talk about inflation and hyperinflation without doing any sort of fucking relativity calculations, which is what makes that even fucking relevant to begin with. Anyway, sorry. We do see that there actually is a little bit of a gap action back down around here. Now, is this a major one? No, I don't really think so. And to be quite honest with you, I don't think that it actually even is a gap. But it is funny that people seem to really focus on the ones that point north rather than the ones that point south. I started out as a professional market maker, authorized trader, and in traditional markets, you have gaps all the time because there's an open and close. You only trade for 6.5 hours a day, which is quite different than this right here, which, CME futures trade like 5 days a week for, most of the trading day, but you still get gaps on them. Anyways, my point is that, in traditional markets, gaps are certainly relevant and certainly very much viable trading strategy, but there's a very specific way to be doing it. And it's really not relevant until you actually get there with price action. You don't just look at it as like a fucking vacuum, but it is interesting that we're going to show a few things that kind of line up with this area down around here. So we'll keep that in the back of our mind's eye. And as always, for the people in the TA program, I want to be following up on that. You do have a bonus module that I uploaded maybe a few months ago, way in the back of the program. Holy shit, man! The program's like literally more than 2x long of what I initially debuted it with. But it's like my life's work now is what it is, and that goes over gap theory and then gap trading strategies. Anyways, so as we focus in on what's going on right over here, back on our Bitcoin charts, I want to now put the what's it called, the spotlight on where do we want to take this next, because there's so many ways to take this. Well, let's first just talk about the daily divergences, which I believe are present on CMEs. Actually yes, they are. So we do have hidden bearish divergence between this point at about 81.50 and this local high that we're kind of confirming right now, or in the process of confirming. Massive divergence between this point and this point right here. I do like that. I think it's a little bit more pronounced actually on spot price action between this point and this point. In fact, did we even make 2 drives of divergence? No, we did not. But we did get a little bit of perhaps regular back right around here. Actually, yeah, we did. Albeit not all that strong. Anyways, more importantly, as Bitcoin has kind of been rising up this whole way, remember the signature that we've been looking at, with the open interest essentially coming down ever since Bitcoin had that stab below about $4,000 right over here. Then volume started tailing off and price action was rising. What does that tell you? That tells you that the rise in price action was coming from shorts closing, which just means that bears are taking profit. And now it looks like, because we see open interest start to steadily rise again, we've actually seen them add 100 million in contract position since about a week ago. In price action now coming down, that does give us a good insight that likely what the big market movers are doing is that they are adding back onto short positions. So people aren't, what you'd expect if Bitcoin actually was going to have a reversal here is you would have expected that we would have actually stepped back above about $7,000 and held above there on a daily with open interest rising as well. That was exactly the opposite of what happened thus far. It doesn't mean that it can't change, but I would say with the time ticking down until the monthly close, that is becoming a shorter and shorter window, because we do have about 2 days left. Yeah, 2 days left in the trading month, and so that's going to make us really consider the monthly look, which we'll get into. Well, let's get into it after looking at momentum oscillators on the daily. So daily Stokes have come up all the way to the bullish control zone, and still price action is more or less caught in a range, also within the context of a rising channel bear flag. So we see a redistribution pattern, this guy right in over here, while volume is tailing off, so that confirms the pattern, while volatility has been tailing off the whole way through, which also confirms the pattern, which, by the way, this same volatility read that we've been speaking about for the last few days has actually catalyzed, as we've shown before, about $1,000 to $1,500 moves plus in the past pretty damn nicely. We've seen contraction going all the way from March 13th at the major low to where we are right now starting to spike back up and maintain above the moving average on it, which tells us that we're probably looking at a move relatively soon, sooner rather than later, most likely. And the last time that we've had, readings like this were, well, should I tell you? Well, I should tell you. Back on over here at the last high at about 10,500, you see it gets very, very low after that spike up, and then boom, massive move from 10,000 down to, you could say down to 77, or you could say all the way to our low. I think that's a little bit too aggressive though. Time before that was coming off our $14,000 high right in over here, gets extremely low right in after that, breaks 10.3 all the way down to, fast all the way down to like 7,500, then, a little bit more for another $1,000, but I think that's asking for a little bit too much there. And then of course, we have the same thing going on in 2018 right in over here where we get extremely low. I'm not going to zero in on it too much because I don't want to spend too much time on this because we've already done it before. But of course, as you do see, we do see a major spike up as price action falls through to the downside. So those things, the underlying market dynamics matching up with with just generic technicals right here as well, which is what I typically do like as a trader. So we're caught in a rising channel, which is a redistribution pattern. We see volume tailing off. We see open interest going up as price action goes down, by the way, and we see volatility basically at a point that we are very likely to see a major inflection point on the market, meaning that we have a ton of juice built up for a big bad move relatively soon. I don't think that doing time analysis is at all worthwhile, or at least I don't think that it can be consistently done. But volatility is the only way that we can really get an idea of what's more likely, because volatility is like is probably the most dependable indicator in the sense that you can always count on volatility to expand and contract. It's a mean reverting indicator, and that's just the way that it's designed, and that's the beauty of mathematics, and that is incredibly useful as a trader in this market. So what does that mean? Well, as we do have a rising channel going on right here, you could even call it a bear flag, and we will talk about bear flag targets after this, although I don't think that it's actually a bear flag, but a rising channel measure move is just is pretty nasty as well. We do see that the bottom side support of this, which is currently coming in around 5950-ish region, would constitute our lower support trend line of this rising channel, just like this blue box over here at around 7,300, which is going to be a very, very important number, by the way, for the monthly, governs our top side resistance. Anyways, if we break below this blue box right here, that will initiate a measure move technically all the way down to about 4150-ish region, down around here, 4200-ish region in this blue box, technically speaking on lower lows if we close down there, which actually will give the higher time frames a chance to get divergence, which means that we actually could bottom out, or at least historically speaking, that's what we look for Bitcoin to bottom out. Not only that, but while we are here on the 4-hour 21 exponential moving average is looking across to the downside of the 55, while you just see it kind of like rolling over right here. Anyways, what tip was I just on just there? Yes. Okay, cool. So while we do have this up, we do have a way forwards. Now, I do think that there'd be bounces along the way, and who knows how long this takes to play out. Who fucking cares? It doesn't matter. I just go level by level. Of course, if we do break 5950 to the downside, I would look for a move down to about 5500-ish region, which is also going to be the weekly 200 simple, which we'll look at a little bit later. Then after that, I do think that Bitcoin would have another short-term time frame bounce somewhere around 5150, and then probably roll over its way all the way down here to its final destination, assuming that this all works out. But we're making massive assumptions right now. I just want to show that all these things work together, and when we look at our higher term time frame signals right now, it does suggest that we do have some downside. Also, while we are here on our medium term time frames, let's go over to the 12-hour. The 12-hour Stokes still plenty down, and still kind of caught in this range that we've been working on. Sorry, I guess I already have that trend line in right there. But remember that trend line right there? That's the one that made me really consider that 6,800-ish region as a nice area of distribution and a local top, which did play out. I'm not saying that to sound arrogant, but I am saying that to follow up for the people who have been on this channel for quite some time. And sometimes these signals do take a little bit of time, but if once you've seen them play out a few times, then you trust, okay, or maybe not trust is the right word, but you see how that interaction is likely to play out, and you don't get thrown off when you're trading a 12-hour and then you go down to the fucking 30-minute chart and start getting scared about every last little momentum oscillator turn up there or divergence play there. It's irrelevant. irrelevant. It doesn't matter. It's bullshit. But more importantly, on the 12-hour right here, we have some very nice trend lines that Bitcoin's been playing off of for the last couple months. And when you find something that works, one of the things that my mentor always said, and I used to fucking hate it, but it is so damn true the more and more that I meditate on it, and that is when it comes to technical analysis and you find something that works, just stick with that until it stops working, and then find something new. And you're just kind of going off of what the next operator is running with, and kind of finding out whatever their edge is. Anyways, right now we do have a pretty damn good one, as Bitcoin has been getting rejected by this trend line ever since February 9th, when Bitcoin was quite literally all the way over here at about $10,000, a little bit north of $10,000. So got that high right there. Then that high is the next high that got rejected on this trend line was back on over here in March, right here, before the inevitable dooms drop from about 8,000 down to 4,500, if you want to call it that. And then once again hitting that trend line right here more recently at 6750-ish region. Now, I do believe that this probably has more time to play out, but I also believe that we're gonna bounce off this trend line down around here, and we're gonna be caught into a nice consolidation period, and then have a resolution maybe in like May or something like that. What is next month? It's March, April, May. Oh fuck, that's too far away. All right, well, fair enough. This market's probably gonna slow down because it has been quite volatile recently, and well, after volatility expands, then it contracts. Anyways, this trend line coming in down around the edge of the bearish control zone is quite nice, as well, as we typically do see some counter trend pressure there, and also connected with some very important lows coming in from our bouncy bounce right here from about 85 to 95, $1,000 move. Then right after that we got this little not that bounce right there, this one right here from 39 all the way to 58. Jesus Christ, $2,000 move. Then again right after that right here around 45 all the way up to really 66, and then now we are kind of caught in a range. So I do like that 3 touches does make a trend, and we have 3 on both sides, and I really like that. Anyways, I would suggest that we do have momentum to be gained to the downside here, and it does help me kind of round out my buys to the downside. Also, 12-hour RSI breaking its rising channel to the downside before price action. By the way, this is the value of looking at the momentum oscillators, which I do put a shit ton of weight on formations within those. And what happens after we break the rising channel to the downside? We're back below the exponential. We're testing around the edge of the bearish control zone. We might have a small bouncy bounce here, but once we start closing 12-hour RSI into this region, I would look for price action to follow through, as well, we'll save it for later. Anyways, okay, cool. So what else do I want to talk about while we're here? Let's actually go now to some fundamentals for this. Or sorry, no, before we do that, let's talk about a little bit more directly towards the people who are saying that the lows are in because Bitcoin can't go lower, bro. And this is your hedge against the financial collapse. And everyone who buys Bitcoin is going to be rich by doing nothing. And then you all just have to hodl it until you're dead, because that's the way that I think that's the way that hodlers think. It's like some guy last night in the Twitch chat, and I don't mean to pick on this person, but I'm just curious. He was saying that I will hodl. He was asking, should I buy Bitcoin? It's like, there's never a good answer for that, because I can't know anything about you and your risk tolerance and your preferences and what you're even trying to do with that. But I basically asked him, I basically said that, and they said, I'm not gonna sell it. I'll hold it till the day that I die. It's like, well, then what's the point? I don't think the world's gonna go to a Bitcoin standard anytime soon. I think that Bitcoin has its place in this world, but you're not gonna be able to use it if you just hold on to it. So I don't know. Fair enough. Would you also be interested in silver? No, just kidding. Anyways, here's a big thing with this as well. If we do start to see the daily Stokes get tired here and start to curl back down, that would be another good indication that we will come back down to low 5,000s as well. Anyways, looking at daily RSI, what do we see? More or less toppy. Looks like it wants to come back down a little bit. But other than that, I'm not seeing anything too obvious. More importantly, let's now, or do I want to get on over to that? Where do I want to take this next? We haven't even talked about the lower term timeframes. Let's talk about the lower term timeframes, then we'll talk about the long term stuff. No, we'll save that for the long term stuff. Okay, cool. Let's go back down to lower term timeframes. 4 hour. Really, nothing's changed here since yesterday. It's just we're kind of playing this out a little bit more. Let's actually go to our GDAX chart. It's a little bit more condensed. But as far as this goes right here, we did hit our lower support of this run. We did get essentially our rejection to the upside as well. I was saying 6,400, we got up to 6,330. Close enough is close enough. My only opinion is that this is very low time frame stuff and doesn't really resolve the whole picture, only the short term. The medium term time frames actually do resolve some pretty big moves, and that would be below this blue box right here or above this area right here, which we'll actually put in a blue box as well, just to kind of denote that it is a little bit more important, but also very irrelevant for current price action because we're quite far away. And then of course the ones that this guy right here and this guy right here, only lower term time frame stuff. If we do break this one right here, I do believe that we will see that full on move all the way down to meet this guy at about 5,900, 5,950-ish region, and probably another short term time frame bounce there. However, I do think that bounce will get sold into over time, or at least likely, and I look for a break of this region 5,950, and then we can talk about more fun targets to the downside. By the same token, to the upside, this trend line right here, we can actually move it down just a smidgen, more in line with our last wick high right here, and that's around 60, let's call it 6350-ish region. If Bitcoin does start to even just trade back above there again, I would look for extension all the way up here to test this blue box territory. But this blue box territory does not change anything, or sorry, doesn't really change anything for the higher term timeframes, but it does for the medium term timeframes. And if we do actually break back above this region, which is 6,750, 6,800, if you're a little bit more conservative, I would look for a full on move all the way up here, which I do consider the top, a test of the top side trend line somewhere right around, let me get rid of this one, it's not relevant either right now, somewhere right around about 7,200 to 7,300-ish region, which is very, very important. And Bitcoin still has a chance to do that, to be fair. Bulls still could pull through here, although I think that looking at the underlying market dynamics, I think it's unlikely, and we'll look at probabilities in just a second as well. But if Bitcoin were to close above this region, I just want to show that I would immediately get long-term bullish once again. The reason being because Bitcoin would finally be back above the yellow 20-month exponential moving average on the monthly, which as of right now, we are clean $1,000 below, a little bit more than $1,000 below. It's right now at about 7,300. That is the importance of the 7,300-ish number from a monthly closing basis, of which we get a monthly close in 2 days. And well, $1,000 move in 2 days is actually not that crazy for Bitcoin. But again, it has to actually do it. As long as we're below there, I am bearish long term. And here's the thing: Bitcoin loves to play off that 21 on the monthly. We can go all the way back down to the Genesis chart on BLX index, and anytime that price action is above the 21, we're generally bullish, especially as long as it has a positive slope. Anytime that we're below it, we're generally bearish. Especially as it has a negative slope. You can just eyeball this one out. Very, very simple. This is something that I use as when I was a professional market maker to judge if a stock was long-term bearish or bullish, and kind of like how to play it and how to angle it long-term. But for Bitcoin, it does seem to work pretty damn well as well, and I would imagine that it's going to work even better as more and more time transpires and this asset gets more and more mature. Anyways, okay, cool. So now that we've got the lower term timeframes out of the way, that was fast, that was easy. Let's actually look at momentum oscillators, because they actually are kind of painting a different picture. We do see 4-hour Stokes technically up right now. I don't think that this holds. I actually do think that it's going to come down sooner rather than later, but that's just my opinion. It's irrelevant. If it turns back around on the short-term timeframes, like I said, I don't have too much of a strong opinion on that. It's only if it breaks, these levels right here, 6350 the upside, or 61 to the downside. Even on like a low time frame close is probably good enough, and then we could target those moves a little bit deeper into the blue box territories right here and right here, respectively speaking. We do have an hourly death cross, so Bitcoin's going to the goddamn floor. No, just kidding. Just silliness. But more importantly, what was the next point that I was going to get on? Yes. Okay. So momentum oscillator. So we looked at the 4-hour. 4-hour RSI does say that we have some more downside here. We are not making any divergence plays anytime soon, as you can see. Let me get rid of this one because it's not. I mean, it is relevant, but it's not really. For this time frame, this looks weak to me. Let's look at the 3-hour. 3-hour looks weak to me as well. We'll be creating, or could create some divergence though. 2-hour did get some divergence, but I believe that's already played out. Yes, indeed, it did. All the way from 6,000 all the way up to 63. $300 move at a $6,000 price point from a 3-hour dildo time frame. That's 5% move. That's incredible. It's fucking incredible. This is fucking incredible. I mean, that's a Saturday. We have the 5% move. Just fucking insane. Hey, traders, come on over to Bitcoin. This is amazing. Anyways, hourly, looking at Stokes, we are rejecting the bullish control zone. So coming down, it's death sense as well. Just kidding. And then 2 hours, well, we do have a nice trend line forming right here, which is likely going to give a little bit of harassment to price action, but could also, but also does imply that we might spend a little bit of time going sideways if we let it catch up. Anyways, that gets lower time frames pretty damn well. Again, to wrap it up, this area right here, For short term, 6,100. If we break that to the downside, I'd be looking for a move back down here to like 5,900. We'll call it. I do think that this likely to happen. We can look at probabilities in a second though, and then we see 6,350 the upside. That would initiate a move back up here towards 67 to 68. And then the critical areas really are these blue boxes with a break, which is going to initiate, much more long-term moves, both to the upside and the downside, respectively speaking. So let's go see the probabilities of these with respect to historical volatility percentile. And the 12 hour has been so phenomenally accurate recently. I don't know why this one's more accurate than the daily, but I have a theory, but it doesn't really matter because who gives a fuck what my theory is. Anyways, more importantly, we can see that the probabilities are very likely going to be angled on the downside here, but let's actually do it right in so we can look at exactly what the probability of breaking 6,100 is for the low term timeframes on the next 12 hour total closure, which is going to be 43%. Pretty damn high, pretty fucking high to be quite exact, actually. And to the upside, we had on the very low time frames. Again, very, 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 very low time frames, so not all that relevant. We'll look at the medium term time frame critical markers in a second here, but looking to the upside, a little bit, significantly less actually, about a little bit less than 29%, which is still relatively high. I mean, anything above 25% is considerable. It's within the realm of possibility. And remember, like, we're looking at a continuous market here. So if something has a 40% or 30% chance to play out, and we're looking at, 3 different candle closures, then, well, statistically speaking, you should be playing out that move, or at least it makes sense for 30%, essentially a 30% probability. Anyways, now that we have those low term timeframes, technically speaking, the probabilities are on the low are on testing the downside. But remember, that doesn't matter for the medium term timeframes, only the short term. So let's go and check out what it would be for the low timeframes, or sorry, the medium term timeframes. I'm going to call it 5,900, just because I want to be a little bit more on the conservative side here. And that, as you can see, you can just eyeball it. It's right at the bottom side of the first deviation. So it's going to be around a 16% chance. This one's going to be a little bit more than that. Actually, 21.5% chance that we actually do close this next 12-hour doodle below that below that critical area, which I don't think is happening. On a daily, though, that's where I think things could actually really angle down here, as we do see the probability. Do you want to call these cones? Do you want to call them rings? Whatever the fuck you want to call them, angling down once again. That actually does have about a 34.25% probability to happen on the next daily doodle closure, which is also going to be the weekly closure, which is really, really important. And then, of course, we could look at the top side as well, which should actually be pretty decently sized here. We'll call it 6,800 just because it's a more conservative number. And we did the same thing for the downside, and less than an 18% chance to happen here. So within the realm of possibility, but not the highest probability, I'd say. And of course, if we go down to a 12 hour, it's going to be significantly less, I'd imagine. Yeah, 3.5% on the next 12-hour total closure in 5 hours and 4 minutes and 5 seconds. So yeah, probabilities are on the downside right now, which is starting to line up more and more with my analysis. And then more importantly, especially on the 12-hour, we do see that the rings are starting to line up with the critical areas once again, which I really, really like. We see the first deviation to the downside showing 59.20-ish region, which is right in line with that. And to the upside, we see about 66.50, but that's not the important one. It's really this guy right here at the second deviation, which is less than a 2.5% chance single-sided above there. So it is more likely that we go to the downside right here. From a mathematical perspective as well. And we can also check out the underlying market dynamic, or actually, okay, so now that we've got all of the low term time frame stuff bullshit out of the way, is what I really should say. Now let's talk about high term time frames. So we spoke a little bit about the monthly. I think that kind of, well, actually, let's do a little bit more of a deep dive on the monthly. Monthly Stokes rejected the bullish control zone 2 months ago, or not 2 months ago, but in October 2019, and look like they are freshly minted to the downside. Again, it's got, it's a long time from now until the end of the monthly close, till another 2 days, but as it is right now, that's not good. And then monthly RSI here is concerning, I do believe, as we did break below and we're holding well below the exponential, which I really do not like. And after 1, 2, 3 tests into the bearish control zone, I fear that this next test might leave us stuck in there for a while. So this can get much worse if that were to happen. Of course, that hasn't happened just yet. And also, we're going to be doing something that we only do 4 times a year. We're going to be closing the quarterly chart as well, the triple monthly. And the triple monthly actually is not that bad. And if the triple monthly closed above the 10 simple, which is actually 7,300 as well, this would be phenomenally bullish. So take it as you will. that is in the card. So if Bitcoin were to pull a nice fake out here and move back above 7,300, massively fucking bullish, especially on a monthly delta closure. And it is possible, to be fair. Like, the probabilities aren't that far off. It's unlikely, but it's not that far off. I am going to go to the downside here, and I'm bearish, and I'm still holding a little bit of my short from 2 days ago at it was like 67, 69, maybe 69, because I like that number. I don't know. But we did it on Twitch, so whatever it was then, still got a little bit on that, although I have covered it mostly with short puts, so I do like that. I like to take profit with those daily options. Just gloriously overpriced options were created to be sold, as the saying goes. Anyways, that is secret information that I shouldn't be saying. Okay, cool. So what else should we look at here while we're on the higher term time frames? So go check out the weekly. We do have a weekly close coming in tonight. There is a couple of obvious things for the weekly close. If the weekly closes below the 200 exponential moving average, that would be incredibly bearish. That is currently at 5,900. That number also very important, of course, as that's the bottom side support of the rising channel. The weekly close coming in at 8 p.m. Eastern time, I believe it is, or at least 00 UTC. That's actually probably easier to say. Midnight UTC, whatever the fuck that means. So if we did close below 5,900, that would be the most obvious thing for playing out more downside, back down to the low 5,000s, and very likely below that over time. I mean, shit, if we close the weekly below 5,550, the 200 simple, that would be pretty nasty as well. But I don't think that we do that today. Also, while we're on here on the weekly, if we do close anything like this, this is going to look like a rejection of the yellow 21 and the green 55 cross that is occurring right now. Let me just take everything else off so that we can focus in on this baby. As this cross occurring right here, and again, if you're in the TA program, reference the EMA module right now. This is very important, because you might see this play out in front of your very eyes, especially if we see this next weekly closure anywhere below 6,000 is going to be catastrophic. And when was the last time we saw this one happen? Oh, it looks very similar to the death cross that we saw on the 2-day, isn't it? And now, obviously, this one's going to be a little bit more formidable, as it is a higher term time frame, but similar results going all the way from 6,900 to 3,100ish region. We do have one of those example. Other than that, in the history of Bitcoin, back on over here, pretty much the same thing as we saw on the 2-day as well. So I do like that, and they should naturally line up. But just showing that if Bitcoin does confirm this as a local high, basically this last week's of price action, then I would expect that to really have some major implications with price action to the downside. Once again, we also do see that weekly Stokes are nosediving right here, and we got a similar trend line governing our lows thus far, going all the way back to February of 2019, like literally more than a year ago, on this trend line right here, by the way. So that trend line has held up this low at 3,100, this low right here at 3,300. This, I think there's another one right here before this $3,000 pump, and another one right here before this $4,000 pump. And then, well, you can see that trend line is coming in much lower on price action. So if we are going to come back down and meet it and play out this symmetry on this market, then we got a lot of time to play on the weekly. Not only that, let's go back down to the daily. So the daily on Bitcoin, we've been saying this as well, or we've been monitoring this as well, and perhaps other people out there as well. Not really focused on that right now. Hey, where are you going? Oh, okay. Elsa's wearing like full on sweatpants. Anyways, so Bitcoin on a macro scale and even on like a major scale has never had a major reversal without playing out bullish divergence on the daily. And I'm talking about reversal. For macro, either market cycle or just long term. And what do we see on this? Well, do we have any bullish divergence coming off our current low? No, absolutely not. There is no bullish divergence at all whatsoever. Even on this major low right here, which was not a market cycle low, but was a major low, we had two drives, 1, 2. This one right here before this $3,000 pump, 1, 2, 3 drives. And it works for on the tops as well, by the way. On our last market cycle low in late 2018, 1, 2, 3 drives. Plenty of examples right here in 2018. On all these failed rallies, and then there's several others in the past which you are free to look at yourself, which I'll suggest. Don't trust me, just verify yourself, and then yeah, fair enough. Anyways, okay, cool. So With that said, is the case for a Bitcoin bottom, that strong here? I would say no. I don't think that we've seen the bottom. If we go over here to some fundamentals, go check out some fundamentals, baby. We're already 30 minutes deep into this video. Holy shit, this one's a long one. This is the Bitcoin MBT signal. Now, I've not been using this one for a long time, but there has been some reworks on this, and I do believe that there are some relevant things to be looking at right now that are interesting. Now, I don't put that much faith in this, and I don't put that much weight on this, and I think that the creator's results kind of speak for himself, and I'll kind of like leave that where it is. But I do think that it's interesting that we can look at some fundamentals here that would suggest that we have unlikely seen the low on the market cycle. Anytime that Bitcoin's made a market cycle low, or even like a major low, we see the MBT signal come well below, or at least a little bit below, the pink zone right here, correlating with this major low right here, correlating with this with these. Actually, these are not even market cycle lows. These are just major lows, but you can see them all throughout the history of Bitcoin. Again, both major lows and some market cycle lows mixed in there. However, more recently in 3100, we actually did not get below that region. At that last stab to the downside at 4000, we didn't get anywhere near that region. So is it likely that Bitcoin has bottomed out here? No, from a fundamental perspective, not really. We can go back to the Bitcoin VWAP ratio. How many times have we looked at this? Too many times, but I'll go over it one more time as we do see that we have the same signature that we've seen many times in the past, many times in the past before major massive doom drops. Anytime that we get the purple and the pink below where my cursor currently is right now, think of that as a nice regression, and the purple leading the pink back down below there, which is almost about to happen again, as we do see the pink is a little bit above right now. Then we have played out 70% drawdowns before. What I'm talking about is right here. You see this move right here that correlates with the last major move from about 10.3 all the way down to 6.5. You see the one before that right in over here happens from, well, basically the high at 20,000 down to 6,000, and then again right here from, well, about 6,000 down to 3,000. Sounds familiar, right? Then we have another example right here in 2014, right here on this bull trap going from here to here, another 70% move. Then we have this one right here on this high, right on this parabolic high going all the way from here to here. I don't know the price numbers off the top of my head. And then again right here, and again right here, and you can again watch these one through for yourselves. But more importantly, we have, perhaps the same signal in the making, and which can be confirmed as early as today. Now we can go back to those examples and kind of measure them out to see what that has produced in the past with regards to the Bitcoin, or to the Bitcoin VWAP ratio, which we had an example right here. That's a 40% move to the downside. We had an example right here. We already know that this one's like 50%. We had another example right here at the high of 20,000 bucks. 69%. Nice, great number. Time before that was way back on over here on this bull trap. I do remember right here going all the way down 77%, kind of a little bit of an outlier there. Then we had this guy right here to next low 66%. We had this guy right here, last high to next low 77%, and then like a 90% one back one over here, which we won't even focus on because fuck it. Don't want to piss off the moon boys too much, although it is kind of fun. It's also going to be fun to piss off the doom boys too, because I don't necessarily think that Bitcoin's going like completely to the gutter. I think that it's still going to be relevant long term, but this can take decades to play out really. If you are a believer in Bitcoin. Anyways, okay, so we spoke about all of that. What else? What other pictures do we want to be painting? Do we have anything to be looking at on the bi-weekly, perhaps? Hashtag gay for TA? Not really, no. Not really, no. I'm not really getting too much from this chart. Let's just put back on all the major moving averages just in case. Nah, not really. Not really. So fair enough. I wonder if we have any jewel signals building up as well. No, we did see a 3-hour jewel sell signal play out though, right in over here, which we spoke about on Twitch a few days ago, right here at the high at 67. So nice, $700 move top to bottom thus far. Not bad. Other than that, do we have any signals building right now? Not really. No, not really. Don't think so. Gonna take some patience for the next big one, but either a jewel buy signal on the low, or at least daily bullish divergence on the low, and then maybe we might have a low. But until then, I'm overall bearish, and I'm overall bearish, especially as long as Bitcoin's below 6,800, that last little local high right there. Do we have anything to look at on the 3-day? Not really. As long as we're below the 200 simple, not good. We even closed the last 3-day dildo below the 377, so it's a little bit of a rejection as well. Again, not the picture of health and fitness here. Okay, cool. So let's go check out. There's nothing to update on traditional markets as they're not trading today, obviously. Let's go check out a couple of the top shit coins and then send this baby off because I want to get to gaming. Let's see. Mr. Buterol looks like garbage. Mrs. Litecoin, ugly. Stellar. Okay, not so stellar. Ripple actually looks okay. Actually, Ripple is probably the most bullish looking one of the bunch and looks like kind of wants to take a leg up to 20 cents. And I'm not joking. But will it do that if Bitcoin comes down? Very unlikely. And usually Ripple is one of the last ones to rally. If you remember in 2018, I think there's a really good example of that. EOS, nope. Neo, nope. Tron, nope. Let's see. What about like Link? One of the traditionally more strong ones. No, kind of losing its luster here as well. As long as it's below about 234, I am not a fan of it. If it could pop back above $2.50, I'd be very bullish on it, at least for a move back up to the prior high around like $3.84. But right now it looks like it's following the rest of the market. Not going to be an outlier. At least that's what it looks like right now. So yeah, as far as Bitcoin goes, we'll wrap this bitch up right now. Overall, very, very short-term time frames, relevant areas, at least for myself. This is not financial advice. I'm not a financial advisor, but 63.50 to the upside would initiate a move back up towards like 67, 68. So pretty damn tradable right there. By the same token, closing even like an hourly dildo below like 6100, I would look for an extension all the way down to 59, maybe 59.50, something like that. That's where things actually can change. Obviously above 6,800 to the north side, I'd look for an extension to 73. That's where the monthly picture starts to change around much, much more. And I get very, very bullish. Below here, and I want that to be no surprise. Right now, obviously my bias is bearish. My bias would change to bullish above here and would moderately change above here actually as well, above 68, just because, we're so close to the end of the monthly close that, getting back above that region would more or less start to really look interesting. Anyways, breaking this guy here to the downside, 5,900 we'll call it. I do think that there'd be bounces along the way, but ultimately speaking, technically speaking, there is a measure move pointing all the way down to about 4,200-ish region. Anyways, that's going to do it for right now. This video is already 40 minutes long. I want to wish you well once again on this nice start to your Sunday morning. I did not test to see if I'm recording or if my mic's working. I don't actually. Oh shit, is it working? I think it is working. But I'll be signing off now. I'll be signing on Twitch in a little bit. I need to eat some food first, and then it's game time. Watching some price action. Maybe we might even see some moves today, which would be really, 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 really cool. Anyways, take care, and until next time,